When a company wants to increase their capital, they will offer opportunities to the public to buy into their company. In other words, the public has the opportunity to purchase part of the company's worth. The public will purchase what is known as securities or stocks and bonds in the company. In order for the company to be able to do this, it will engage in what is known as investment banking. The main role of this practice is to help companies increase or raise enough capital by selling investment securities to the public. Many of us have heard about stocks, bonds, and Wall Street. However, many of us don't know enough about the industry in any meaningful way. A simple way of understanding investing is to think of it as a way to save and make money simultaneously. An investment banking account is similar to a regular account in that it is a way to perform financial transactions. Unlike a regular account, investment banking accounts are much more complex, and the rewards can be much greater. The reason many people don't consider this practice is because most investment institutions do not transact with cash or the traditional interest like most commercial institutions do. Investment banks primarily deal with stocks, bonds, and securities. They lend these securities to their customers based on the price or value of the stocks listed in the trade markets. Companies or individuals can set up escrow accounts as opposed to checking or savings accounts. Most will have a consultant working with them who is also known as an investment banker. These professionals are experienced in all aspects of investments and the stock market. In short, they oversee the entire account while the owner, the corporation or individual, doesn't have much involvement over the day-to-day supervision or operation of the account. In fact, the owners don't even manage how much or what type of investments are made to the account. The laws and regulations governing the accounts can be very complicated at times, which is why it's important and necessary to have an investment banker handling the account. Although corporations generally use this practice, it is not just for companies. In fact, it is open to the public and is a great way to capitalize on your future. Stocks, bonds, and other securities are often seen as more stable and reliable than cash, especially during difficult economic times. To understand more, contact your commercial financial institution to see if they can refer you to someone informed on the matter. Speak to an expert to make sure you discuss all of your concerns and have a good understanding of how everything works. It's always important to educate yourself due to the inherent risk of losing money when dealing with stocks, bonds, and securities.